righty. Good afternoon, everybody. Hope you're all well. All right. Is the volatility over? Are there still opportunities? What do you guys think? Is the volatility over in the market? 2 days ago, it was over. Why is it still here? Do I believe it's due to tariffs? Do I believe it's due to my toe is too big? Do I believe it's a double bottom? Do I believe it's because the Cubs aren't in spring training anymore? No. You know what I believe? How much has the market been up the last couple of weeks? Right? How much? What do you think? You think it's fair that how many SPX points has it been up? Huge! Is it okay to have a couple down days? Yes. Period. That's it. It's not double bottom, triple bottom. It's not because, Pavarotti. It's nothing. But up a lot. It come back a couple days. That's it. The Corona thing, you know what? I'll get to my 2 cents in a second. Let me just say a couple things. A couple slides here. There's a lot of colors coming at you. Jenny's got a lot of colors coming at you. A little bit of black, a little bit of purple. A couple things right off the bat. A couple things I want to remind you of. As I was thinking about this today, this whole Corona thing is, it is what it is. It's going to go on, for a while. And I think as Bezos said today, when Amazon, which is probably the big reason we're down today, Amazon is down 171 points at 2,300. How many thought before today that it might be another 17 years before Amazon has a down day? How many thought before today that it might be another 17 years before Amazon has a down day? All right, anybody? That's a joke. Yeah. It seems that way though, didn't it? It seems that way, right? But a couple things I want to let you aware of. Again, I think the volatility and some good two-way movement in a volatile market will continue for months, just because this is a process. Just like it's going to be a process to open the economy, it's going to be a process in the market, right? Period, right? Is VIX going to go to 18 anytime soon? Nada. Isn't going to happen, right? This is a process. Do I think eventually we'll go up? Yes. But it's a process, right? This isn't like a normal correction. We go down, we come back in a month, resume highs. No, right? So I just want to let you, for those of you who haven't had an opportunity to see these, 2 classes that one we've just finished, one we're halfway through, and I think these would be a huge help to you as we go through the next 2 or 3 months. The first one you can see here, the hedged volatility strategy series, and you can go on Sheridan Mentoring, get a little more details. This we finished. I think that was a great one. It was 4 weeks. We did one on hedged credit spreads, hedged iron condors. We did one on a backspread strategy, which the last 2 days has just been beautiful. After a rougher week last week. And hedged, there's a 4th hedge. And I forget at the top of my head, but it's recorded. You get 20%, the same 20% off. Check that out. And then the current class that we're halfway through, which is a very good class, the trading basically flies and calendars in a volatile market, short-term trades. And we still have 2 weeks left. You can watch the previous weeks recorded. And again, I want to make those, make you aware of those. And you can get the same 20% off of that. So check that out. This would be good to get it now. You can, over the weekend, catch up a little bit. But even if you don't catch up, the nice thing about our classes is they stay recorded. So whenever you watch it and you have questions, you just go to the class page and ask questions. That's where I think our on-demand classes are unique, because they just keep on and you can continue to ask me questions. But again, I think these are definitely 2 classes you want to get in your arsenal as you go over the next couple months. So let's take a look at the market. What's the news today? Amazon, again, I took these slides a couple hours ago. We're down a little more than that. My nephew Johnny, it's a great picture of the two bulls with the mask. That's awesome. News today, Russell down 8%. What's down pretty good? Tesla, Micron, Exxon, airlines down yesterday, down today. And we're going to look at some short, vague opportunities. But again, here's the thing, right? If I bring up, you know what, folks, again, I get it. When you're a financial journalist, you got to come up with a reason why we're up and down, right? Here's the reason. I'll give it to music. Da, 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 da. Oh, this is Amazon. That's the wrong song. Let me go to SPX. Ready for my song again? Here we go. Da, 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 da. So we got up, what, 350 points or whatever in a little bit of time. But even the last week here, up a lot. So this is just normal, healthy breathing. Agree? Right? Catalyst can be anything. Is it Amazon? Is it the tariffs? Is it, the Michael Jordan Sunday thing they're doing? Is it, but you know what? If it wasn't the tariff, right, it would have been something else, right? Again, there's an ebb and flow here. And as you look at the market, it's an ebb and flow, baby, right? That's it. I mean, the moving averages, I just have a basic 50 and a 200-day moving average here. We're coming down towards the 50 moving average. A couple things I'll point out. If you want to say, okay, Dan, what do you expect for the market over the next week? Now, again, I'm going to give you 2 bits of information. What do I expect of the market over the next week? Price-wise, I'll just give you the numbers. Right, if we look at the SPX, you say, what do you think the market will be over the next week? Well, I'll give you a 68% probability, right? Say how? Look at the expected range, right, to May 8th, next Friday. What does it say it is? What's the expected move, right, based on the current volatility levels, right? Based on the current volatility levels, an expected move is about 116 points. What does that mean in Spanish and English, right? And I'm going to round this because I can do math better on it. We're at 28.24, but I'm going to call it 28.20 just because I could do math better on 28.20 than 28.24. So it's saying over the next week, there's a 68% probability we're going to be between these two numbers. Dan, what are those two numbers? I want to round it here. 27.20, 27.05. And on the upside, 29.35, right? There's a 68% probability over the next 7 days will between those two numbers. It's called an expected move. It's called a standard deviation. It's called whatever you want to call it, but that's what it means. Everybody get that? And what is that based on? It's based on 7 days. It's based on where the current volatility levels. How much has VIX gone up in the last 2 trading days after dropping 12 to 14 points in about 6 or 7? How much did VIX go up in the last 2 trading days? About 8 points, right? 7 or 8, about 8 points. That's a lot, right? What do I think the range? Now, again, you can have an expected range of VIX over the next 8 days. Maybe someone could look at that for me, but I'll give you my range where I think the VIX, the range that I've thought the VIX is in, that I'm looking for in the VIX for the last month, and I'm still at those numbers. I'm looking for basically 30 to 45. That's been my range in VIX for a good month. We got close to it and then bounced. Could we have gone to 25? Absolutely. Do I know 100%? Of course not. But this is what I think, because again, I think this is a process with the corona, right? It's not like a normal correction. It's going to take time. And that's what Bezos said. Did he not? What did Bezos say? He basically said, this is Dan's interpretation, take a chill pill, right? Did he not? Did Bezos basically, the head of Amazon, say, listen, take a chill pill. The money we're making, you know what we're throwing it into? Safety for our folk. Corona. Take a stinking chill pill, right? This is going to be a process, right? We're going to have to invest in this, right? So cool your jets to the investors. I give him credit, right? And it's going to be a process, right? He wouldn't be taking Q2 profits and spending it on Corona if it wasn't a big deal. It's a big deal. And so it's going to affect the market, and it's going to be some range. I think it's going to be wonderful for trading because I think we'll have a range. And let me ask you a question. There has been a range in the market. If you're an income trader or a spec trader, would you rather have a range in high volatility, or would you rather have a range in low volatility? All day long. High, right? Absolutely, right? So that's my 2 cents. Back to the PowerPoint. So I'm going to give you a couple slides here, some opportunities we're looking at. And again, in our class next week, we'll continue. We meet Tuesdays and Thursdays next week, and we'll put on live trades at every one of them. We'll show you what we're doing. And again, if you want to learn the craft from A to Z, these are good opportunities, these classes. Now, I took this slide a little bit ago. We're not bad. We're 28.29, almost 28.30. So this is applicable. So VIX up. And what I want to point out from this slide, folks, John says a few days ago, you said the VIX range is 35 to 55. I don't know if I said it a few days ago, but I was 35 to 55. I think I lowered it to 30 to 50, but I don't think I was 35 straight 55. I don't think a few days ago, but yeah, I've been in that ballpark, but I don't remember. But I've been 30 on the low end for at least a week. So if you look here, again, you could see here's the SPX, here's the ATR. Again, ATR is just a measurement of the how wide these candles are. The wider they are, the wider the range. The less big, that's not good English, the narrower these candles are, you have narrower ranges. Narrower ranges will usually be better for income trading. So anyways, I think we're in a range. We're a little bit higher volatility. I think as far as where the VIX is right now at 38, I'm looking 30 to 45. We're kind of in the middle end of the range, but I'd be still a net seller of extrinsic value. And that's what I'm going to talk about. 2 trades that we were looking at today and continue to. So here was an example of a 28-day iron condor and SPX that I was looking at. I don't normally put stuff on Friday, range bound stuff, spec I would, range bound, but because I have more duration and because the volatility is up today, I don't have a problem with it. Short-term trades, I would, 15 days are out. How many people have done iron condors in the last month? How many people have done iron condors in the last month? Yeah, and what is an iron condor? Just a call credit spread and a put credit spread. Why would somebody put an iron condor on? It's a range-bound trade that makes money in a range, and it benefits from a high volatility environment if it gets lower. Let me ask you, would I rather be in range bound stocks or not range bound? Range bound or not range bound? Range bound. How many think Amazon's range bound? Yes or no? How many thinks Amazon is range bound? Absolutely not. Would I do an iron condor in Amazon with your money? No. Why? I want some type of a range. Has there been a range in SPX? Yes. All right. So here's an iron condor. Here's how I set it up. Here's how I would be looking to set it up today. On the call side, again, this is only 28 days out, this particular one. If you want to do it 40 or 50 days, you could. Is a 45-day better than a 28-day? No. Is a 28-day better than a 45? No. Is a 7-day better than a 45? No. Is a 7-day better than a 28? No. Is there a best duration with iron condors? No. What if you think there's a better duration for iron condors? You're wrong. There's pluses and minuses, right? Normally, as the volatility gets higher, I'd rather be further out in time. But there's always this trade-off between you go too far, it's more of a volatility play. If you go too close, you're getting a lot of theta, but you have more price risk. So this is what I was looking at today. So with us at 28.34 at the time, I saw the 3070 calls. The 3070 calls were approximately 240 points out of the money. And I was selling the 2520 puts about 310 puts, 310 points out of the money. This was the delta of the short put, the short call. The delta of the short put, that's how I picked my strikes. And then I took my hedges, my longs, 10 points away. So my position deltas are as close to neutral as you can get. Minus 0.38 is less than a half a delta short. What's delta neutral to me? Plus or minus 2 deltas. Is this neutral? Absolutely. Right? Now, on 28 days, how long would I probably look to stay in this? About 10 days. Right? Is the expected move in 10 days going to go through my short strikes? There's the probabilities. If I'm going to stay in this 10 days, I'm concerned about the expected move for 10 days, not 28. Is the expected move for 10 days going to put me through my short strikes? No way, right? Could it happen? Well, yeah, anything can happen, but probability-wise, which is what we go for, no. So I think that's a good way of doing it. The credit is 240. The risk is 760. Dan, how'd you get risk or margin of 760? I'm doing 10 wide credit spreads. So my risk is $1,000 less my credit, 760. So for every one of these I do, if I do one, it's 760. If I do 10, it'd be $7,600. So the potential at expiration, the potential yield at expiration is 240 divided by 760, it'd be about 31%. Am I looking for the whole thing? No. I'm probably looking for 7 to 10%. Why do you think I'm only willing to do, what's the thinking behind going for 7 to 10%? You say, Dan, why wouldn't you go for 31%? Don't you like 31% better than 7 to 10? Yes. But why don't I? Less time in trade. There's two sides of every, you can't have your cake and eat it too. If you're going to be in it and get the whole credit, you're staying in it till expiration, right? There's a much bigger expected move if I stay in it 28 days. If I'm only staying in it 10 days, right? I'm taking less, getting it in most cases, and then getting out of town, right? And then going back again. So the longer you're in the trade, the more risk it can go against me. The less I'm in the trade, the less. I mean, there's pluses and minuses, but this is how we trade it. A question said, is it best to leg into an iron condor? For anybody who knows me, anytime someone asks me a question, best, and I totally understand why people ask for best. They want a clear answer. Any guy in the options world that answers you and says there is a best, call me up, right? I'll send you Portillo's hot dogs. Get them on the phone with me. We'll have a discussion. I'm not saying there can't be a favorite, but best insinuates there's no other way. No, right? There's pluses and minuses, correct? But is it best to leg into an iron condor? What do you think, yes or no? Would you rather do the iron condors as a whole spread or leg into it? Better to leg into it? Leg into it, what does that mean? Do one side at a time. Let me ask you a question. In a crazy volatile market like this, is there an opportunity to do a Three Stooges? What do I mean by a Three Stooges? We're going down. I do the call side. And the minute you sell the call side, the market turns and starts going up. What does that mean, a Three Stooges? You're going to end up doing it, for example, in this one, it's a 240 credit. You leg into it for $2 credit, right? So normally what do? I put it on as an iron condor. The whole schlemiel, right? Everything. And on this, I'm looking to make maybe 10% of this number. So if I'm looking to make 10%, where would I buy back this spread? Let's see how many of you are on top of your game. If I sell it for 240 credit and I'm looking for 10%, give me an approximation. You don't have to be exact. Where would I buy this back for? What number? About what? If I sell it at a 240 credit, where would I buy it back to make 10%? If I sell it at a 240 credit, where am I going to buy it back to make about 10%? There you guys are going. I see a couple got it. $1.65 debit. If it hits $1.65 debit, I buy it back. Then how much did you make, Dan? 240 from 165 is 75 bucks. 75 bucks divided by 760 is about 10%. So if I buy it back for 165 debit on capital of 760, I make about 10%. Can you guys hear me? All right. You can hear me. One person said I was breaking up. Okay. So let's test you again. If I don't want to lose more than 10%, usually I will put a little more. If my profit target is 10, I might set my max loss at 15 just to let the probabilities work a little bit. All right. So if my max loss, let's call it 12%. If my max loss is 12, no, let's leave it 15. If my max loss is 15%, right? Where would I buy back this spread if it goes against me? Where would I buy this back? If the spread increases and goes to what level would I buy this back? If this spread expands to 355, I'd get out. Why? If it goes to 355 and I sold it for 240, that means I lost $115 divided by 760. What's that? It's 15%. Dan, are you suggesting that we actually have a plan? Dan, I'm used to trading bing, bada, bing. I put on loud rock music and I trade by my stomach. I trade by the flow of the air and the flow of the energy. Good luck, right? This is a craft, right? And let me tell you something absolutely amazing. This will blow your mind. The people in our community who do well with iron condors, they've done 30 or 40 of them the right way. Isn't that shocking? that somebody who plays the trombone longer than the other guy is probably going to be better? Isn't it amazing that if somebody makes fettuccine Alfredo 30 times versus 5, if they do it the right way, they're going to be better? Shocking. Same principle in trading, right? Is it intelligence? No, I wouldn't be doing this if it was intelligent. It's a craft, right? It's no different. A lot of people in my family growing up in Chicago, they were either electricians, policemen, or firemen. My brother just retired as a fireman in the last year, Chicago Fire Department. It's a craft, right? You learn it. You have passion and you learn it. If you said to me, hey, Dan, can you give me what students of yours are successful? The most successful students, are they the smartest? Absolutely not. Now, let me take that back. Are our successful students very smart? They are. But if you said to me, what two features does it take to be a successful trader? Well, obviously being disciplined and just discipline and follow guidelines. Really, that's why I always say fifth graders would beat the pants off if we took the people here versus fifth graders are crazy enough to listen to you still. And so it's the discipline, just following the guidelines and doing it over and over, same vehicle, same strategy over and over. But you know what the second thing is, which is just as important, and this is why most people don't last in trading. It's not an intellectual exercise, but it's passion. I look at the people in Sheridan Mentoring that are really good at this. They like it. You know what? I'd call them junkies, but that's what I am. And they enjoy it. You know what I mean? So if you enjoy something, if you enjoy cooking, it's not going to bother you to make fettuccine Alfredo 20 times. Agree? Excuse the bad analogies. All right, let's move on. Question by John Rinaldi. I think that's an Italian name. John, is that Rinaldi? Rinaldi, I mean, I would buy pizza from Rinaldi. If he had Rinaldi's pizza, I'd buy it. Right? Right? Now, if it was like O'Malley pizza, I wouldn't buy it. I'm Irish. Right? But if it was O'Malley corned beef, I'd buy it. Right? So do I enter the closed limit orders for both max profit and loss every day? No, what I would do, John, is this. So let's just say I do this for 240 credit now, right? I do it now for 240 credit. What do I do? Normally what I would do, John, is put an order in right away to buy it back for, let's say we said about, if I'm looking to make 10%, I'd buy it back for, I think we said 165. So what I would do is go into my brokerage firm, put an order in, a good till cancel order to buy it back for 165 debit. That way I don't have to put it in again Monday or Tuesday. Just put it in, it's done. Put it in 165. And then, again, the loss part is different. What I normally would do is I kind of keep an eye on it and I kind of know where these things get in trouble. Like when the delta, again, if I'm selling this at a delta of 10, the short call, and the delta of 16 for the short put, when those things kind of increase by 10, I'll take a look at them. They're kind of going into the bad neighborhood. So I'll know, but I would, but you can look, but if you're just looking at every day, look when your P&L, right? You're watching the spread. If my max loss is, I don't want to lose 15% of this number, right? 15%, I think we said, of 760 is about 115. So if this 240 gets to 355, I'd buy it back. See, when you're in there trying to buy this for 165, just check on it a couple times a day because it's going to give you what the mid price is. And if that mid price is anywhere near 355, I'd get out and just get out. So again, we don't have time today to get into adjustments and everything else with an iron condor, but just Here's the problem. 80% of the population, you think, well, Dan, it's easy. I'll do this, every 2 weeks, I'm going to put on a 30-day iron condor and I'll follow these strict guidelines. Let me tell you this. Those simple guidelines, putting it on every 2 weeks in SPX, for the most part, I mean, there's some times if the vol's too high or low, we might not, but generally we're putting it on. And then if we're saying, hey, get out at a profit or loss, do those seem like pretty easy guidelines? Put it on every 2 weeks, kind of according to how I'm saying it, 10% loss, 10% profit, 15% target. Does that seem intellectually easy to understand? Yes or no? Please say yes. Yes, you can put an alert on one side of the vertical. So yes. So if that's easy to understand, if you said to me, Dan, if so easy to understand, what's the problem? You ready? What do you think the problem is? It's not thinking. Yeah, it's thinking. Yeah, I guess, Jim, but it's the people. Do you think if you told a 5th grader, listen, put this on every other Tuesday, get out at a 10% profit or 50, and you kind of showed them 15% loss, do you think they'd over question you? Yes or no? Do you think they would over question you? No, they just do it. But what I'm telling you from teaching for 15 years, when you're taking adults, right? And again, a plan. I teach adults probably between the ages of 45 and 90. That's the age I teach. To get adults to be disciplined in this with all the distractions and they're always thinking and overthinking, it's difficult, right? It's difficult. This isn't brutally hard. What's brutally hard is sticking to a plan. Now, again, I'm not even beginning to say we mindlessly put this on. We look at the VIX range and, I wasn't putting these on, we generally put these on all the time, but, in the environment we're in now, I'm not putting them on at 28, 29, 30. I'd probably be putting them on, right now, I'm excited to put them on, right? Anyways, let me move on here, as they say. Iron butterfly, very similar. Are they in the same family? Is it like the Gambino family and the, spaghetti family? Yeah, right? Both Italian in the same family. Again, what's the difference between an iron condor and an iron butterfly? An iron butterfly is a call credit spread. In the calls, call credit or put credit spread. Iron condor, call credit spread, put credit spread. What's the difference, Dan? And an iron butterfly, you're selling the at the money call and put. That's called a straddle. And a iron condor, you're selling an out of the money call and put, right? So here we're selling the two options that have the most extrinsic value, the at the money, and that's the part of an option that decays the most. That's what volatility is a measure of, that extrinsic value, that at the money call and put, the juice as I call it. So you're selling the straddle and then you're buying your hedges or protection 50 points out of the money. That's it. So you look at this iron butterfly, there's this window. And if the volatility is higher, I'd rather do an iron butterfly. I mean, they're both very good, right? But slightly, this I'm selling I'm selling the at the monies, buying my wings 50 points away. So if I do this when I was looking at this, it was a $55 credit. The risk is the difference between the strikes. These are 60 wide. So my risk is $6,000 less the credit I bring in, which is $5,500. So if SPX went to 0 or 200 billion, right? My risk is $500. That's my margin, right? Right? You're going to have higher probabilities with your iron condor. You're going to have more theta because you're selling the at the monies with your iron butterflies. But again, when you look at for the way we treat them, folks, you know, let's just say this 28 days, we're only going to be in it maybe a third of the duration. If you look at the graph, this is your expiration graph. This is your graph today called the T+0. The T+0 line is going to look pretty similar the first 10 days in both of these, not that much different. I like these iron butterflies. I like them both. But anyways, these are trades that I'm looking at putting on, especially in the last 2 days. Now that the VIX, again, I'm looking at this range of 30 to 45. Now we were in the real low end of the range. Now we're back at a nice thing. Now we could easily hit, you know, again, we've been up quite a bit. So if we go down a couple more days, will VIX go over 40? Yes or no? If we go down a couple more days before we turn around, will VIX hit 40? And Sylvester Stallone would say, absolutely, right? Absolutely. And again, this particular trade, if you can see the T+0 line, this looks like it goes up a little bit down. That's just because the position Greeks are just a little bit short delta to start out, but I have no problem with that because to me, delta neutral in these range-bound income trades is ±2, right? Anyways, folks, I have enjoyed you coming in and spending time with you. Again, I want to encourage you, watch these slides. This will be available on the recording. Approach the business as a craft, not as a crapshoot. It breaks my heart to see. I was reading an article yesterday. Thinkers or TD Ameritrade. Did anybody see this? Some of these other brokerage firms, they're signing up accounts faster than you can click your toes on. Do you agree? They have just been signing up accounts. Has anybody saw that? That the new accounts at some of these brokerage firms are going through the roof right now. Has anybody seen that? Anybody notice that article? But what's the thing? Let me ask you guys. Are they giving away money in the market? Are they giving away money in the market? Some people might say yes, but they're not giving it away, right? And the problem is new traders are coming in. You're getting Joe, the construction worker, all these people. The problem is all these people now are at home, right? And they can go in and get free commissions. They can go to Robinhood, get free trades, right? But let me ask you, even though this is a great business in terms of entry, it's not like overhead. If you want to open up a Popeye's fried chicken, or you want to open up a Subway place, there's overhead, right? And you could say, here, what's your overhead? You have a stinking computer and fire it up, right? Commissions are free. But is there risk on the trading? Is it free profits? I don't remember seeing a brokerage firm yet that says free profits. Yeah. And the shameful thing is, and this has been going on in the brokerage industry for years. I remember having a conversation with a brokerage executive years ago, and he says, yeah, Dan, every 3 months we got to keep marketing. Why? People will come in, they'll trade for 3 months, they'll lose some money, and they're done. You got to get another batch, right? And I said, well, why don't you do something crazy? Why don't you teach these guys teach them the craft? Oh boy, that's a lot of work, and we try to. The craft is hard, right? But a lot of these people, that'll be the same. Even if they get lucky and buy some Apple and it goes up, or do this and make some money. And I'm not saying they can't, right? But I think it's a high probability, and that's what the article was saying, within 3 or 4 months, very few will be standing. And what I'm saying is, yeah, you could get lucky. You buy an airlines on a day it's down and it goes up, or you buy a tech stock when it's down and it goes up. Yeah, but I'm just saying, learn the business. The goal is to be doing this in 10, 15 years. I think this is the best business in the world. I think it's a great business. You don't need a lot of overhead. You don't have a lot of overhead, but you got to enjoy it. And as long as you approach it the right way, like a craft, and it's not a get-rich-quick scheme, I think it's a good business. It offers a lot of flexibility. You know, you don't have to get an office, you don't, you know, but it's a craft and it takes time, right? Anyways, folks, that's enough of my spiel. Check out Sheridan Mentoring. Those are great classes. We'll be sending out email on that. Join us this Tuesday for the flies and calendar class. We'll continue teaching, but I think these two classes particularly, check them out, will be a huge help as this Corona thing will go on for a while. And I think these strategies are some of the key strategies we've been using. So thanks, everybody. Appreciate you coming in. Have a wonderful weekend. And thanks for listening to my tirade. See you later.